Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. Hope you're doing well. Thank you for being here. Nice to see we have 200 people already in the show, and hope your trading is going okay this week so far. It is, slow start to the week, but we have a big event happening tomorrow. Tomorrow we get the CPI numbers, and CPI is expected here. We are expecting, in terms of analyst forecasts, we're expecting 2.5% year over year inflation. Now, let's just assume for a second that we do get 2.5% year over year inflation tomorrow. Let's just assume that we get that. If we get 2.5% year over year inflation, how are we doing in terms of the inflation progress? Well, I think you have to, in order to answer that question, to say, how is inflation going, is to look at the direction of inflation, right? Similarly, when we're talking about interest rates, or we're looking at GDP growth or PMI data, what is very important not only to the statistic that comes out, but it's the direction that matters. And so markets are continuing to see this multi-year cool off in inflation that we've seen post-COVID. So tomorrow's print is expected to come in at 2.5%, right around here. Okay. Now, is that damaging to the big picture story here? I would say no, not really. Inflation still generally seems to be headed lower. But guys, the thing is now, for quite some time, inflation was like everything we talk about on this channel. We talk about, inflation's bottoming out, or it's still at 7%, 6%. Those were scary inflation figures. And for quite some time, the market has really paid close attention to the CPI report. Last week, however, I think you started to see a stronger shift towards a bigger focus on the labor statistics than the inflation statistics. Look, inflation is pretty evidently like moving lower. It's hard to make a case that right now inflation is already trending higher. Now, you may say, well, with those big old tariffs, if those go into play, we may see inflation really truly bottom out and start to move higher again. I hear you on that. That's very possible. But right now, it's hard to say, looking backwards, like, okay, look, we've had some incredible progress on inflation. Do you guys remember? I mean, did anybody else feel like sticker shock when you'd go to the store during that time? It was like a really crazy experience. To go to the store and to see prices, like to feel. I think we're kind of getting used to it now, but I don't know about you guys, but here in the US where I live, if I go to the grocery store, it's like $75 minimum. I guess maybe like $50. Like if I'm going to pick up some groceries, I think I picked up groceries, like just like some basic set of things, like some fruits and vegetables, some chicken, some sausage, Diet Coke, a necessity for me, and a couple other small things. And I think it was like $75. It's things have gotten expensive. However, the good news is prices are not going up nearly as fast as they were. a couple years ago. In the last few years, we've really seen progress on inflation. So I think that, this 2.3% inflation, 2.5%, I think this is kind of a whatever level of inflation. This is not a traumatic level of inflation, but inflation is a huge thing for the consumer. You know, Inflation is more damaging to the consumer than labor statistics weakening are. Why? Well, because some of you guys may have jobs and you may think, you know what, my job is like super secure. Even in a recession, they're not cutting my job, especially if you're good at your job, right? If you're good at your job, and your job is a very necessary role at the company that you're at, if the world goes into a recession and your job is a very stable one, then hey, you don't have too much to worry about. But inflation affects everyone, and unfortunately it disproportionately negatively affects the middle class consumer, because if all the prices are rising, that hurts everybody except for the ultra rich who have tremendous amount of money and assets which go up with the inflation. So the point that I'm trying to get at with this inflation figure is inflation has seriously, like, we've made some incredible progress on inflation. So I think with the NFP report coming in, it didn't massively beat. We talked about this yesterday. The NFP report did come in better than expected, but it was not like some incredible beat. It wasn't like this monstrous outperformance, right? ADP missed expectations pretty sizably. Unemployment rate remained flat at 4.2%. This is still healthy. Unemployment claims went up last week. We'll see if how they come out this week. So the jobs data is now kind of more in focus in my view, but you have cooling inflation, and that's a really good thing for the markets. Let's just take a quick look here in terms of the markets, see how things are moving this morning. You've got S&P 500 and NASDAQ, again, flat yesterday, very indecisive move. However, Russell's been moving. We're still moving and grooving on the Russell, which is great. I have a long position on the Russell. This has been a really good play for me here recently. I did trail my stop loss, took my stop, moved it up here just behind this doji looking candle here on the daily chart, but specifically on the 4-hour chart, I just liked this level of support, right? So we had kind of the big push back up to these highs, right? And we were able to actually break through that level. So when that happened, I just said, okay, take that stop, put it right here where you kind of built a base and shot off this level, right? So basically, I'm willing to continue to hold this position as long as we can hold this level of support. But as we continue to push higher here, things are now looking even more promising for the Russell. I may get an opportunity to trail a stop even further. But I really don't want to, crowd this trade. But I mean, I don't want to get too fancy with it. I basically just think that the Russell has more upside, and I'm not too worried if it pulls back here and bounces off, or if it even pulls back here and it bounces off. Like, I'd be happy to hold those trades. So sometimes people will ask, Nick, why don't you trail that stop further? Why don't you lock in more? Trust me, sometimes I wish I had. Like, for example, if we get, a sell down in stocks right now, I'm going to kick myself and be like, dang, I shoulda, coulda, woulda. I wish I put my stop loss here. But you have to think about this. Technical analysis, I've been thinking about this a lot recently. Technical analysis, for me, doesn't have a ton of predictive power of what the market's going to do next. It's really just a risk to reward measuring tool for me. Like, if I think that this market is going to go up as a big picture, which I do, according to my system, the Russell, I don't know if it's still bullish. Oh, it dropped down to neutral here recently. But the Russell has been a generally bullish instrument in the Edge Finder. We've had the S&P 500, NASDAQ, Dow. Those three are still getting bullish ratings. So I generally think indices are going to continue to move higher. So if my bias on indices is I think we are likely to continue to move higher, right? Then how do I want to play this? Well, I don't want to squeeze this stop loss right here and say, not only do we have to move higher, but we have to move higher right now, or I want to get out of the trade. I like to trail stops loosely, because if my directional bias is still up, then I don't want to crowd the trade. When I say crowd the trade, I don't want to make my stop loss I don't want to tighten it so much that any sort of normal daily action would get me out of the trade. One way that you can do this that I find to be a really cool methodology for stop loss placement is get your average true range out and go back and basically, let me just pull this up, and I'm going to just make this a brighter color so we can all see it. Get your average true range out and say, okay, so this thing is moving 13 points a day or every 4 hours on average. So if I'm trailing my stop on the 4-hour chart, right, get your ATR out and say that a 13-point move every 4 hours is about this far, right? But typically what I do is I use the daily chart. So if I'm looking at the daily chart, 39 points per day, right? So 39 points would put us here, or it would put us here, right? So let's actually just mark this out, because roughly we could have a normal move in the next 24 hours according to the ATR. Let's just call it 40 points in either direction, right? So if I just take that and I say, okay, our normal range is roughly within this. To me, as a swing trader, if this is expected, guys, right, we can look at the average true range as a general guide of expected move for the Russell based on the recent, market volatility. So looking at this, take a look at my stop loss. And okay, so we can say like, hey, a normal move could be something like this in the next couple days. If that's a normal move, do I want to put my stop loss within the normal move range? No, not necessarily. Not unless I'm looking to day trade, or if I want to, if I want to narrow my search a little bit, right? But really, I've trailed my stop loss based on the daily chart. I got down to the 4-hour chart just to look at the zones a little closer, but it's really based on the daily chart, which is where I'm primarily trading the Russell. So try this at home, right? They say don't try this at home. You should try this at home. You should experiment with, play around with the ATR indicator. It's free on all of your major charting platforms, and just throw it on your chart, and you can see what the average daily move for the asset or instrument or stock or whatever that you're looking at will move on a daily basis. So this is an average move. Like, this is a normal range for the Russell to move in, and should not cause me to freak out, or my trade is not null if this thing moves within this range. Now, if this trade moves substantially beyond the limits of this, then yeah, I'll cut the trade and I'll say, hey, look, we are clearly changing our behavior and I just want to get out of the trade. If you have questions in the chat, I've seen a couple great questions come in here already. If you guys have questions for me today, we'll drop a link to a form that you can fill out to ask those questions. I don't want to make you feel like I'm ignoring you. It's just that I have a lot of charts that I want to get through today and a lot of presenting that I'd like to do. So if you have a great question that you've dropped in the chat, do me a favor, just copy and paste it into this form that we'll drop here in a second. And towards the end of the stream, I'll answer some questions. Trump's going to come on and tell everyone to buy the Edge Finder. I hope he does. Actually, it would lead to a huge boost in interest in the product. However, it would instantly make the product way more controversial than it is. It is not a controversial product for the most part. We have a pretty cool. Now, like, I don't say that just to say it. Like, genuinely, we have like 95% of people that watch the videos. They're just like, oh, the Edge Finder is cool. You do get the 5% of people who are like, you can find all that stuff for free on the internet. And I'm like, okay, go do it. It's easier said than done to put it all in one place like this and to score it and all that stuff. I get it. Like, do your thing. If you don't see the value, great. But most people who see the Edge Finder, like, that thing's cool, I want to get it someday. And I'm like, awesome. So let's jump into some more charts here. So I just did a breakdown on my Russell trade, which is a kind of the primary trade on the index side of things that I'm in right now. Taking a look at the dollar index, which is sitting back here. Made the point that the NFP report here recently, which we have covered a lot on the channel, it was a beat, but you can't get too excited about the beat because it was such a narrow beat, right? So the NFP report was good, which did shoot up the US dollar on Friday, right? We had a little bit of a pop on the US dollar, but you can see it already kind of fading and just not showing a lot of follow through. And I'm not surprised by that, because when we take a look at our heat map for the US, a lot of our metrics for the US dollar are in the red. We have very negative sentiment or negative data points dropping for the US dollar here recently. PMI is negative. We get inflation tomorrow. This is going to be really important because, if there is going to be something that's going to turn the ship a little bit for the US dollar this week, it would be CPI and PPI. Like if you get like a 2.6% inflation reading or 2.7, I mean, that would cause some revival, I think, in the US dollar bullish trade. But most likely, I think we're going to continue to gradually cool in inflation. So I don't see a strong case at this time for a bullish side of things on the US dollar. Nick, I only seem to make money in trading when I do the wrong thing. The thing is with trading, the chart can only go up or down, right? So if I randomly say, I think this is going up, sometimes I'm going to be right. If I randomly say things are going to do wrong, it's all about what your performance looks like in the long term that you really have to think about, Steve, because the thing is, anybody could be right a couple times in a row and think they're good at trading. Like if I just said, I think the dollar's going to go down, and so I'm going to buy, like I'm going to do the opposite of what I think it's going to do. It sounds great in paper, but many people who have actually tried that come to realize that even that doesn't work. Why doesn't that work? Well, because it's more than that, right? If you are actually just a 50-50 trader, like you have no ability, like no analysis that's helping you to generally find a direction, then it doesn't matter if you are right or wrong. Over the long term, you're just going to be break even to losing if you're risking too big. And if you're like going all in and you're wrong, you're going to blow up, right? So even if you are a 50-50 trader, you'll find it incredibly frustrating. Even if you're like, if something's working for you right now, this is the trap of so many traders. They say, I've found this new strategy, this new RSI crossover, whatever strategy, and it's working amazing. And every time I hear that, I'm not trying to be negative about it, but I think to myself in my head, I'm like, okay, do that for a month and come back and tell me like what your stats look like. And most people will find that what was working really well this week might not work really well next week. And so it's all about longevity in this game. Are you going to do something? Are you doing something that's going to work decently well over the long term? Because most traders think good strategies, I say this all the time. Most people think that a good trader's equity curve is going to look like this. They think that's what a profitable strategy's equity curve looks like, when in reality, it looks more like this. Okay? Do you see the difference? And you can even have steep drawdowns, even with a good system. So I'm showing you, this is something that I wish somebody would have just drawn that for me and expressed that to me. Because again, traders think that good strategies look like this. And I've never seen any professional in the space who has a strategy that long-term, their equity curve looks like this. Right? You don't just win 95% of the time and you're just a god at calling the markets. Like nobody's doing that. They sound like it because social media, you can select what you upload, right? So there's a selective bias that happens on social media where only people will only show you the times when they're right. So they look like they have this kind of return. When in reality, people who you actually look at their trading performance over the long term, it's more like the blue line. It's choppy. It has upside, it has downside. There's frustrating drawdown, even for great traders, where they're like going through one of these moments. And if you haven't truly spent the time to test your system and come to accept its flaws and its pros and cons, basically, then a time like this, what happens is if you haven't fully done the research behind your strategy and you're just kind of trading it, what happens is the second you hit one of these road bumps, you quit. That's what most traders do. They quit every time they enter into a drawdown because they're like, this system doesn't work. But they have a fundamental misunderstanding of what good trading systems look like. Trading systems look like this. Good trading systems look like this. Unrealistic trading systems look like this. They're not real. And most traders end up doing this, where they stick with a system when it's working well, but the second it goes into drawdown, they quit. They say, nope, that doesn't work. But everything doesn't work at times. Everything works. Like this is why many people, you'll hear people say like many systems can work in trading. Well, if you are talking about moving averages, right? Moving averages work great when they work great, right? So if we go back to like 2022, for example, look how great moving averages would have worked. any retest of these areas, buy those retests, and it just worked magically. And you could very easily have convinced yourself, I found it. But what basis did you just build that bias on? The dollar's only going up. People do this aggressively in indices, right? So when the indices are performing really, really well, people, they call, there's an expression for this. You guys know the expression for bull markets? Everyone's a genius in a bull market, right? That's the expression, because it's easy to make money in stocks when stocks are going up. But what most people do is that when stocks do not go up and they start to plummet, people give back all of their gains that they made in a downturn. So even in stocks, nothing in trading is easy. Sometimes it can feel easy when your system is just kind of hitting it on all cylinders, but nothing works 100% of the time. So I'm not telling you this to be depressing. I'm telling you this because you need to hear it. If you're going to be doing this, if you're going to put hard-earned money, you've got to accept what we're talking about here. So let's take a look here. We had some people ask questions. I'm going to get to those in just a second. Let me check our lineup today. Terms of streams, we've got 9:45, Alan Perez coming on. So we've got about 20 minutes till Alan is coming on. So I'll do some questions in just a few minutes. If you have a question, like I said earlier, if you'd like to ask it, feel free to click the link. We'll drop it in the chat here in just a second. Also, little bit of a announcement too. Sorry, that was the wrong thing. If you are not already inside of our VIP group, speaking of Alan, quick little plug. Alan has officially joined our VIP group as a lead trader within the group. So if you're not familiar with this, we offer a service where you can see all of the trades that we are taking, context behind why each trade is taken, entries, exits, stop losses, analysis behind every trade, charts to go with each and every trade. So for example, like this Russell trade that I took. So you can see the full breakdown behind why I took that trade, buying small caps, specifically I traded IWM, domestic onshoring could favor the Russell, key support, inflation cooling, Fed could cut rates this year, in my opinion. That was my basis for the trade. Then I marked up the chart, shared the screenshot, shared my entries, shared my plan of stop loss if I needed to get out of this trade. And I've updated this trade as it's gone along, and I've trailed my stop loss. You can see I put my trailed stop and notified members of this. Additionally, this is a cool new feature, is the A1 Trade Tracker, which is available to VIP Gold members. You can now see all the trades that I'm in, updated every 15 minutes on the A1 Trade Tracker. If you are a VIP member, just navigate to this, and we are working on getting set up with Alan's Trade Tracker as well. So we got some cool stuff happening behind the scenes for the VIP group. It's a great time to join, especially this week with CPI right around the corner. Just wanted to let you know as well with all this that for the time being, for a very limited period of time, we are offering 45% off of our lifetime memberships within the group. So if you are a serious trader, like we just got done discussing, and you accept that trading doesn't look like this, but rather you want to get on course to being a trader that is able to do this, I can help people with this because that's what I do, right? That I can share experience building a system that generates, something like this, like a slow and steady upward grind in a portfolio. I know how to do that because I've done it for years. Painstakingly, I've figured that out. I cannot teach you how to do this, and I will never claim on my channel to know how to do that or have some secret, magical, mystical strategy that's going to produce results for you like that. That will never be me. But if you are someone who you vibe with the slow and steady, and, think about this. I think about this all the time. I want to do this. I want to see what happens to my portfolio if I do this for another 30 years. I just want to see what happens. If I keep going, if I keep improving, if I keep dedicating myself to this craft, where can we go with it? And the cool thing with our memberships is they're one-time payments. They do go up in price over time. So full transparency, with the 45% off discount, you are getting a great discount to join us. Now, I understand not everybody wants to pay for services. Totally get it. But if you see yourself doing this for the long term, and you enjoy my commentary, you enjoy the way I discuss things, or you find the community here something that you want to be a bigger part of, take the plunge, pay one time, and stick with us for the next many years. We're not going anywhere. We got long-term visions. Let's do it together. Don't trade alone. Genuinely, there's some great people in our community. I've met wonderful people. I met Alan from what we're doing here. He's a member of our VIP community. He met up with me in person in Chicago, or he's from Chicago. He flew down from Chicago, met up with me in Atlanta. So there's real people. Chris Pulver, you guys know him. He's also in our VIP group. I've met some wonderful traders and some friends in the trading industry through the community. In addition to that, you can see every trade that I'm taking and why I'm taking it. So I know I gave you a little bit of a sales pitch there, but I genuinely would love to have some of you guys join us inside of the group, and it's 45% off for limited time. Click this link right here that's been dropped in the chat, or head over to a1trading.com/VIP to explore the memberships. And I really would love to get to know more of you guys and have you join the Discord. So if you're considering it, take the plunge. Again, it is worth every penny, and it's a lifetime membership. So you pay once, you're in there for good, and you'll meet traders from all over the world doing the same thing. So there you go. Dollar index still moving lower here, still sitting back. I mean, this has not been a very impressive move for the dollar. What has been impressive is gold holding up decently well. We've had some weaker economic data, which has moved me back into the camp of being bullish on gold. And so if I take a look, for example, at the top setups page, let's just take a quick look, see if gold is on this list. Gold's still getting a neutral reading, so I'm going to keep watching this. But gold is one that I would like to be long. I don't love the technicals on gold at this time. Like, it's been very choppy, but I got to say, the support holding here, like, buyers have held up really well. To be fair to the sellers have also kind of held this level of resistance. So if you get prices moving up to this, 34.40 level of resistance, we'll see. I think that you really have something to prove there, and we'll see if we can get the kind of breakout. Yeah. So we had some questions submitted. I want to just pull these up here in a second. If you had a question for the live stream and you've been patiently waiting to get them answered, I appreciate that. I'm going to do this here now. Let me just pull up our questions from the stream. And James, if you don't mind, just taking a quick look, just looking over my shoulder here, not physically, but if you could just pull up the live stream questions and just make sure there's nothing inappropriate for the stream. I'll pull that up in just a second. If there is, you can delete it from there. But anyways, in just a second, we'll do some live stream questions, and we'll see how that goes. Sale gives me access to everything. It gives you access to everything in our Discord. So we offer a Discord VIP group where you can see all the trades, educational group, the trading chat room, strategy guides, VIP coaching webinars, the chat room, like I said. So you get everything within the Discord. You don't get access to the Edge Finder with it, but you can bundle it. So if you have that as part of your wish list, you're like, I want to get the Edge Finder with it, just message us. Let us know that you would like that. James, if you could just drop the link one more time for anybody who has questions about what our offer entails, what it does and what it doesn't offer. If you have any questions about it, you want access to that 45% off discount, click the link being dropped in the chat to speak directly to our support team about that, and they'll get you hooked up. All right. So let's take a look here in terms of the live stream questions. Pulling them up. Okay, so in terms of June 10th, starting today, OT, good to see you, OT. Hope you're doing well. Question is, they've been trading for less than 1 year. Question is, hey, Nick, hope you're doing well. Balancing a 9 to 5 is pretty tough. Any advice? OT, you are totally onto that with that statement. I think a lot of people, can I just ask really quick to the audience, do me a favor. If you work a full-time job or you are a full-time student, can you just type yes in the chat? Like, I'm just curious, or type no if you're not. Like, if you're like, if you're a part-time, or if you are trading full-time, or if you have anything else, type no in the chat. Type yes if you are doing something full-time, student or job, and type no if you're like part-time or not not working and you're just trading. Okay, so yeah, this is kind of what I thought. We've got a lot of yeses. Everyone kind of hitting us with the yes in the chat for the most part. So let me give you a little bit of context. OT, this is going to sound crazy to some, but I would consider myself someone who also works full time. Like, I definitely put in the hours for a full time job that has very little to do with trading. What I mean by that is building stuff like you're looking right now at. I run the YouTube channel, so I'm creating content. I'm game planning. You know, we're working with sponsors here behind the scenes. I answer emails. I'm working on, you know, the Edge Finders programming side. Like, I definitely put in easily a full-time job that has nothing to do with trading, right? I work all the time. And so I can understand this strife of, now I do have an advantage. So let me disclaim that what I do all day long, a lot of it does circle around trading, even if it's not directly trading. You know, if I'm building the Edge Finder, I'm still learning things about trading by doing that. So it's not, but I still put in a tremendous amount of hours per week that has nothing to do with chart time and trading. So I can understand, you know, the difficulty of balancing all that because I do it myself. What I would say is what you really should just focus on is, this is my honest opinion, continue to grow your 9 to 5 path. I know that's not an exciting thing to hear because everybody wants to quit their job and just trade full time. I get it. But if you like what you're doing day to day, use it. It's a tool. It's a tool to build up trading capital. People, you know, love to just like talk trash about, oh, I've got a job, right? Or I have a day job. It's a great thing to be productive during the work day. And especially if you do something that you like, you can use that to fuel your trading journey like nothing else, right? I know there's a lot of smart people in this room right now who are doing exactly what I'm talking about. And they're saying, I take my job seriously. Maybe you even like your job. Maybe you dislike it. That's fine too. I would encourage you though, do something that you actually like, something that doesn't kill your energies, like, it's got to be something that's fueling to you to some degree, like you enjoy doing it, but use it. Get good at your job too, because it is ultimately going to help your trading if you can generate more capital to work with. If you can get that promotion, if you can get that kind of next job title or you know, something like that, you can use that to fuel your trading career. It is tough to do both, but so is everything else worth having in this world. Good relationships, you know, having good health, eating well. Everything is hard, right? So the reality is you're not going to get away from trading is hard. It will always be hard. It's always hard to learn. It's always a time commitment, and there's a little bit of sacrifice that goes with it. I'm sure you know that because it sounds like you're doing that and you're like, I'm balancing it, I'm working on it. Any advice? I would just say, accept that it's going to be hard. But the thing is, if you love trading, if you love learning about markets, treat it as your hobby. Take it seriously, but treat it as a hobby. Don't like kill yourself trying to become a full-time trader tomorrow, right? Embrace your current role. Use it to fuel your trading journey. Invest in education, right? This is I don't have anything to sell you on this, but I think every trader as part of their expense should take some money and dedicate it to education, perhaps in the form of a backtesting software like Forex Tester or tradingview.com. I don't have like a promo code to give you with those. Actually, I do for Forex Tester, but I don't have an affiliate relationship with them. So they didn't sponsor the stream. I would tell you it's worth every penny to invest a little bit of money into some backtesting software, invest into some education. I'm not talking about spending $5,000. I'm talking about take $1,000, save up $1,000 and invest it in the things that you think would help you to improve and speed up your trading journey. I know that, you know, sounds rich coming from the guy who's selling an Edge Finder. I get it, but I genuinely mean that. I think, you know, don't buy the Edge Finder. Leave it on the side for a second. You should also buy other things. And I'm not talking about buying prop firms, because while I do think prop firms are a great tool, it should not be where your first $1,000 in education goes. Your first $1,000 in education, and maybe the only $1,000 you need to spend on education, should go towards backtesting softwares, educational resources, premium subscriptions to TradingView, things like that, right? I think it's worth it. I think it's worth it if you have a job that funds your trading, if you're serious about this. There are many, many sites that can help you backtest, help you learn. I do think that the Edge Finder is a worthy investment. Otherwise, I wouldn't sell it. I think it's a great tool for many traders, and it can be written off as a business expense if you run a trading LLC for your own tax benefits, things like that. It can be written off. It's a tool. It's like an educational platform. So I do think you should consider the Edge Finder, but even if you don't, I would say you should dedicate some time, energy, and capital to investing in trading career if you're actually genuinely serious about it. I know everybody wants to do everything for free. My channel is 99% free, right? I share so much stuff for free, but some people just resonate better with, and I don't sell a course, right? So I don't have a course to sell you, but some people resonate with a detailed, organized, categorized, sequential course. Maybe that's what you need, right? Don't think of it as losses. Just think of it as, this is part of my educational journey, $1,000. I really think that is, and I'm not, obviously I think you should also buy the Edge Finder, but even if you don't, I'd start with those other things first. Takel says they've been trading for 3+ years. Primary goal right now is to learn about fundamental analysis. Trading under bind, I found myself able to hold and swing my trades, but this year I have been finding it difficult to swing trade and been feeling like I should adapt to more of a day trading or scalping approach, because 1 minute we're in a risk off environment and the next we're on a risk on. Just want to know if I'm approaching the markets wrong. Is it really possible to swing under these conditions? So Takel, the thing is, yes, trading under these conditions. So I would just be careful with the trading under Biden was good, trading under Trump is bad, because I've personally found it. Trading under Biden was great. Trading under Trump has been great so far too. Now, you can mess up any environment, right? Volatility spiked like crazy with the whole Trump tariff stuff. So I get that, right? That was a very difficult time. But we also had big spikes of volatility under Biden too. We had the carry trade unwind and Bidenflation and all those terrifying things, people freaking out about that, right? There's always going to be something that freaks out the market. We had Russia invade Ukraine. We had the COVID pandemic, right? These things are going to happen. It's unfortunately the world that we live in. There's chaos that erupts out of nowhere. So I wouldn't say necessarily that the president has a massive impact on whether or not you should be swing trading or scalping or whatever. I think you should test your system under many and different environments. Come to the kind of decent strategy approach that we talk about often on the channel, right? We're not looking for perfect. We're looking for a good enough strategy, something that makes profit over the long term. So I've been swing trading things quite a bit here recently. I've traded some Forex on the swing. Well, I primarily swing trade and position trade. So I've had some really good pushes on the index to the long side here recently. I stayed out of the indices during the initial drop off, which helped me out. I caught gold. Gold had a beautiful push up, but I would say add some filters to what you're doing. If you're struggling to find, swing trades that are following through, broaden your horizons a little bit. If you've been trading gold and trying to swing trade gold on a daily chart, it's been tough. I would not be profitable in this environment. And so I've kind of avoided gold because the Edge Finder kind of helped me to filter out that trade after we had some economic data that came in a little bit better than expected. We saw some of the tariff stuff unwind. Charts started to go sideways, and I avoided that. I've been avoiding trading gold here recently. So, the thing is, when we look at the markets that we're trading, if you're trading gold and having a tough time swing trading, well, I don't blame you. This has been a hard trade recently to catch any. I mean, if you're bullish or bearish, you've been chopped up. If you had tight stops and you were looking for breakout trades or you're looking for break and retest, like this has been tough. So I know a lot of traders trade gold. That's why I went to gold, just to see if that's what you're talking about. Same thing with the dollar, right? The dollar's been very back and forth on a bigger picture. We've had some trends in there, but it's not the same kind of follow through trends that we saw for the first couple months of the year. So I show you that just to say, if you're struggling, if you're going through a drawdown right now, don't shy away from drawdown, because that's one of the biggest mistakes. People say, oh my gosh, I'm in a drawdown. What am I doing wrong? Well, you might not be doing anything wrong. Drawdown is part of any strategy. What you might need to do is just keep your position sizing small enough to survive the drawdown and work towards the next environment that works well for you. The other thing that I've added to my kind of list of things that I do is I don't trade one asset. I trade a large list of things, which makes it so that almost always there is something that I have an interest in trading that's moving well, that I feel I have a confident economic, technical, and sentiment basis around, and I can trade the follow through moves that I'm seeing. But then if I'm looking at things like gold, gold has been on the neutral category, so I've just not been trading it. And that has saved me from some losses, right? So most people are always like, oh, I want to find the perfect entry, confirmation set of rules, but they undervalue the concept of just avoiding neutral rated setups, right? So yeah, silver's had a nice breakout here, looks really strong. Gold, however, has been pretty choppy. So if we take a look, let's go back to our questions here so I don't miss some of those. We're coming short on our time here. Next question is from Glenn. Primary goal right now is to learn more about fundamental analysis. Do you think the AI trade is a bit overblown at the moment, especially factoring in things like global power infrastructure currently not being at a level to supply what's needed, potentially leading to another dot-com bubble type scenario, only to recover later down the line? So the thing with, I've seen that a lot, right? This concept of like, is the AI trade like the internet bubble that we saw in, 2001, 2000? In some ways, like, yes, but at the same time, no, because a lot of the companies of today that are employing AI are already like massively profitable. Whereas in the dot-com days, I was not trading, I was not investing, I was a young kid at that time. But during that time, a lot of the companies that were popping up, they would just have a URL and people would start investing in them, right? It's kind of like almost like crypto today, where it's way more speculative. It's not backed by revenues and profits. It's backed just by hype. Today's, top dogs are like the most impressive companies of history. Like if you look at like a Microsoft, this is a cash machine. This thing is a monster producer of revenue. Same thing with Google, right? These companies behind the AI revolution, they are massive money machines. They make so much capital, right? So that's the difference between the days of the internet bubble, which was a lot of hype and super high valuations. Are stocks valued high nowadays? Yes, but not nearly as high as they were in 2001. So that's my situation with that. I think the AI trade has more room to go, personally. I don't think we've reached peak euphoria. Personally, I could be wrong about that. And I wouldn't necessarily say I'm all in on, Palantir per se. I think it's a great company, but I think it's way overpriced, that particular one. But it's not like every stock in the market is just massively through the roof right now. So I think euphoria is not. I mean, we can also take just a quick look here as an example with the put to call ratio. You can still see sentiment in this market has been pretty negative here recently. You've had the put to call ratio come down a little bit, but still, it's not like we're down here, which is like very, very euphoric levels of call buying. We're not in that mode. We've also seen the investor sentiment survey, which has been persistently very bearish, right? You can see high levels of bearishness in this market. So that tells me we have more room potentially just to squeeze the bears, to be honest. When everybody's on the bull camp and the market's hitting a fresh all-time high every single day and price valuations look insane, yeah, I'll probably start selling calls on my positions more aggressively and be very cautious like I was going into this year. Last question here says, primary goal to learn more about fundamental analysis is from Kidus. Kidus, I apologize if I said your name incorrectly. What's your trading related question? My question is not about trading for now. I just want to know why you called your company A1. Can you tell us the reason? A1 just sounded cool to me. It also shows up really high in search if you rank things categorically by alphabet. So that was part of the reason. I also just thought A1, like top one, like sounds good. A1 as in A plus. So yeah, just thought it was cool. Anyways, guys, up next, we've got Alan Perez joining the stream here for just a second. As I mentioned earlier, we are working on getting Alan's trades into the A1 trade tracker where you can see, what he's up to as well. Our VIP group is currently 45% off. It's the biggest discount that we do all year long. Do not miss the opportunity. We'll drop a link here in the chat to where you can take advantage of that 45% off offer while it lasts. So click that link, chat with a member of our support team, Get yourself a membership and come join the action on Discord. Hopefully, we'll see some of you guys there. Up next, Alan Perez. Stay tuned.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partner broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Good morning, everyone. Good afternoon, wherever you guys are. How you guys doing? And yes, my trades will be in the A1 Trade Tracker. I think everything's pretty much settled on the back end. It's just a matter of me now placing trades. So I'll go ahead and go over how I'm going to navigate the market because I'm pretty flat right now. I have nothing going on, and I'm looking for a chance to participate. Hey, Glenn. Hey, Dragon. How you guys doing? OT, how you guys doing? See a lot of laughing emojis out there. I hope my hair is not messed up or something. But hey, Lee, regulars here. How you guys doing? If you guys want to send me some questions or charts to look at, I'll go ahead and look at those. But I want to go over what I'm going to be looking for dollar, right? So the dollar is in a place where obviously it's very bearish. Despite the decent okay NFP reports, all that got faded back down. Despite US and China having a conversation today and knowing that it went well yesterday, dollar's still down. So it seems like despite hints of good news, dollar is heading lower. So this level here at the 97 handle, 97.9 is the worst case scenario. And, tomorrow we have CPI. We also have PPI coming in supposedly better than expected. We also have Michigan consumer sentiment. If you guys look at the bottom at the calendar here on TradingView. So those are supposed to come in better than expected. And if CPI does come in hot tomorrow, then we can expect dollar to potentially get a little bit of a rally. And what I'm looking to do is fade any short-term dollar appreciation. So whether it means shorting it at the 100 handle, or maybe maybe later today, Trump says that, US and China went really, really well, progression, solidified deals, and we trade up to that level today. And then with the extra push of CPI tomorrow, we trade a little bit higher. Regardless of it, I'm looking to fade any short-term dollar appreciation if the setup looks good technically. Now, if we just keep getting green candles, solid green candles, candle after candle, then I'll sit back and wait until we see a loss of momentum or a slowdown, and then I'll go ahead and short dollar. So let me go back to see how you guys are doing. Yo, Alan, what's good? What's good, man? You're very pretty today. Don't worry. I appreciate that. I tried my best. Do need a haircut, though. MA, how you doing? Hey, everyone. Hey, Gerald. Nice to see you. All right. Do you mind showing us the economic heat map? Kids way, I will. That's part of the my what's the word I'm looking for? Part of the process that I'm going to do today. So I'm going to show technically what I'm looking to do as far as shorting the dollar. And then I'll go over to look at the fundamentals, and I'll show the heat map as well to see and showcase how you can use fundamentals and technicals to kind of set up a trade. No worry, man. Lee Allen jumping on, fading down dollar. Ball out. You've been saying dollar to 95, 96, but you haven't said when. And I agree with you, but the when factor is the difference between a profitable to unprofitable state. So if I do a market order now and say, dollar to 95, 96 and no stop loss, then sure, it can get there eventually. But what if, we get into 300, 400 pips of drawdown, 100 pips of drawdown? It's not the best scenario. So I agree with you there. And I do agree that perhaps we can get another short-term dollar appreciation, a move higher where you can short at a better risk reward ratio. You get a better prices, all that stuff. So I agree with you on that front. So what I would look technically on the dollar, and I'll just look at the dollar index, and then we can kind of go into the more specific pairs. Dollar index here, I would like to short originally or initially here at that $100 handle. Now, a lot of my strategy and my approach is discretionary. So let's say we get this push up to the 100 handle with lots of momentum and we keep going, then I'll sit and wait, right? So before I short, I want to be on the, if you guys know Lance Brightstein or Brightstein, he very much preaches being on the right side of the V. Essentially, you want to be at the already other side of the flip of the move, right? So I'm not just going to short if we get up to the $100 handle with strong candles. I want to see it start to taper off, right? So that's essentially what I'm doing. So at the $100 handle, if we blow past it, then I'll wait, be more patient, and try at the $102 handle. But essentially being on the right side of the V. And what I would look for on other pairs, I did post my chart markups in the Telegram, which is completely free if you guys want to go into that one. But I want to get ahead and looked at the pound and the New Zealand dollar. I'll start with the pound dollar. Pound last night, I'll pull it up here for you guys. Actually, to this screen. 1 second, guys. Here it is, financial juice. Pound last night, if you can see, let me get this epic pin. Got a mix of employment data for the pound, and it came out worse than expected. You see this with the employment change coming up positive. But for the most part, the pound saw some weakness last night because of its employment figures. And if you look at the chart, what happened was it got sold off, but this level of support that we've established as support got bought into, showing that buyers are stepping in this level. So perhaps if the US sees that hot CPI print tomorrow, we send it lower, this will be a good opportunity to go ahead and buy the pound. And this level has been holding ever since May 20th. So it's been holding for a while. This is a good level. We've already established it. And then target-wise, I'll target something like the 3,600 level right here. And then if we blow past that, then obviously we trail stops. So for the pound, that's what I would do. Also, just to kind of add on to the fundamental outlook for the pound, you see that retail is heavily short. 65% of retail traders are short. 35% are long, which is a good confluence, right? If the retail is heavily sided one direction, you want to take the opposite side of that. COT data, last time I checked, it was pretty good. Let's see, pound. Actually, no, pound. Where's pound at? Net position is 35,000 net to the long side, whereas the dollar is only 617, right? So this could be a make or break week, because if we see a bad CPI print or continued bad data for the US, we could probably expect that come Friday, this net position is going to drop, for the dollar. So that will be a good confluence as well. And if we also look at the economic surprise meter, the pound is still pretty resilient as far as beating expectations. So despite last night, 86%, beating expectation, that is a very good thing for the pound. So that is what I would look like, or how I would participate in dollar weakness. And I know that was a lot to throw at you guys in a short amount of time, but that's pretty much how you can use the fundamentals and the technicals as well to build a good trade. Because you could technically participate in other ways, right? You could go, for example, if you want to short the dollar, you can short it by, I don't know, you could say the Swiss, right? But the Swiss is not the best. I think the best case scenario is in Forex, when you're trading two pairs, the quote and the base currency, strong versus the weakest. You want to make sure that divergence is as wide as possible to get the most lucrative move that you possibly can. Another one that I would really like to participate in is the New Zealand dollar. Ever since April 9th, was it? April 9th? 8th, 9th, yeah, whatever. Look at that. Strong move up. And I would have expected that we could have at least broken this level of support here and filled some of this, but we didn't. We've been trading above it, and now we're, on last Friday, was it? Or last Thursday, we broke off of the support. We seemed like a fake out at the time in hindsight, but now we're trading right above it in those levels, showing me that buyers are just stepping in at any chance of a retracement. And the New Zealand dollar, similar to the pound, has been really resilient. If you look at the eco surprise meter, it's no surprise why the price action matches the fundamentals. This would justify right then and there. Someone asked me to look at the heat map for one of the countries. Let me see. If you could re-ask that question, I'm scrolling through the chat. Oh, US Eco heat map. Got you. Yeah, US Eco heat map it was more red. It's starting to get a little bit better, depending on the prints for this upcoming week. We kind of get a better picture. But just look, just it's showing pretty mixed bag. Tells me that it's not in the best shape. It's not the best performing asset out there. There's better ones out there. So let me go back down. Let me scroll back down. King Lambo Allen dropping the wisdom. Bashy, good to see you, man. Haven't seen in a while. Besides the 24-hour stream that James did, which was really cool, man. I hopped in and out of it all day. Great entertainment throughout the day. That was like awesome. That was like, imagine one of your favorite shows is on 24/7. You can watch it whenever you want live. That was pretty much me. Bugatti Bashy in the house. Ball out. Let's not ignore the fact that you are Bugatti Ball out. I'm the one that assigned you that. You can't throw that off to Bashy. But yeah, let's get back on track here. So the New Zealand dollar would be my preferred vehicle of choice when participating in dollar bearishness. This thing has been bought up every chance it gets. Similar to the pound, if we go to retail sentiment, give me a second to pull it up. Here it is. New Zealand dollar, where are you at? These are every other ones, right? It should be here. Come on. Are you not here? Let me just do New Zealand dollar's not on here. Okay, let's do this. Let's check it on Forex Factory, because they have their own. They have a tab, unless they're just not showing. Okay, New Zealand dollar. It's pretty much 50-50. 51% of retail traders are net short and 49 are net long. So actually, it's a pretty mixed bag on the New Zealand dollar front. So, and then also, what also is a good confluence for the New Zealand dollar, if we look at COT data history, which was what I was looking at just now, and we pull up New Zealand. Oh, there it is. Got you. Good net change here. It's, it was at a point where it was super just bearish. And I think now we're starting to come up a little bit from that. So we had some long contracts added and short contracts being removed. So I think that the New Zealand dollar was in a position where it was extremely, oversold over a week. If we look at the weekly chart, it got down to these very extreme levels, 2020 lows, 2022 lows. And now we're still starting to recover. If we are, let's say we're hitting the lows for 22 and 2, we should also consider the highs for that year or for that area, that timeline. In my opinion, if the dollar, weakness continues, we could get up to, I don't know, maybe this level here. Let me draw it out for you guys so you can see what I'm talking about. Something like this, right? If we see continued dollar bearishness, cooler than expected CPI print, which will be good for the dollar, but good for the inflation, economic health of the U.S., but bad for the dollar currency. That could give the Fed that confidence to start cutting their rates, and yeah, we could see traders starting to price in those rate cuts, and we could potentially see New Zealand dollar trading up to this level, at least the 6,200 level. That is something that I could see is not off the table. All right, let me catch up to the comments. And then if you guys have any questions for me or any charts that you guys want me to look at, I saw Euro Pound, which I'll look at that right now. I remember. That was a great stream. I was on it for like 12 hours with James. Yeah, it was great. I hopped on there for a little bit. I talked to James. Nick got on there as well in the US at nighttime, which was cool to watch. So I enjoyed it, man. It was like I woke up, watched it a little bit, after the A1 stream. Throughout the day, I was like making food, eating, watched it again, hopped on it. It was cool. It was to stream for that long is pretty remarkable, man. Like I don't think I could do it, staying up that much in one spot. So all right, we got Euro Pound that we want to look at, euro yen, gold. Oh, what the heck was that? Okay, let's look at gold. Let's see. Let me remove these here. I have this alarm on gold because this will be a good swing level, in my opinion, for a buying opportunity on gold. Yesterday, not much of anything. Today as well, we could just start trading lower. Who knows, right? Gold has been just pretty much staying in this little area here, so perhaps we can trade down low here. If we do, in my opinion, that would be a really good, responsible time to go ahead and go long on gold. And if I were a gold trader, swing trader, I would do something like this. Something like this. Let me go down to the 4-hour here. I would position myself like this. There's kind of two ways you can approach it. You can make it static to where you have a set stop and set a buy, right? We're like this. But then if we get taken out right here, my next entry level would be here. So what you could also do is go in very small here and then have another order right here like this. And then it would be like, all right, you get tagged in here. Cool, no problem, small size. If it gets down to here, you get tagged in here as well. Now you've built up a little bit more of a size, right? Let's say you do half your usual position sizing here. That way, if you do get filled here, you're just at a standard, whatever position size you're used to. And then if you get taken out, it's still a controlled, responsible loss. But I think this will be a really good risk to reward for gold right here. Or you could just, I don't know, if we see price gets here, this is another part of my discretionary thing is like, I'd have this level looked at. I won't get a limit order, but I'll see it, obviously if it gets here, I'll see how price is reacting. If price just keeps kind of pushing lower, then I just won't get filled. I just wait, and then I'll try to get filled somewhere here. That way I'm not like sitting in drawdown in one position and waiting for the next one to get hit. That's how I would play. But to me, this is a possible chance. I think we have a somewhat of a good likelihood that gold can get to somewhere at this 32.20 or 32.50 level, in my opinion. And buyers have stepped in here once, 2, 3, 4-ish times, 5 if you want to count this one here. So this is a pretty good level where, if we just look historically since April, buyers have stepped in right there to buy gold. So, all right. Okay, I'm seeing a lot of minor crosses here. Euro, let's look at euro pound. I would assume euro pound. Oh, this is interesting. This is a level that I had marked up. We did kind of get a little bit above there, but we're at the higher, or we touched the higher end of that range, which is good in my opinion. So whenever I get in an entry, if I mark up my zones pretty wide because it's not like a specific level. It's more of a range or an area in a market. So and because I'm swing trading, I can afford to have wider stops and stuff like that. So these ranges of 15, 14 pips, which is pretty much nothing, right? Euro pound trades, the ATR in euro pound is like 30, 40, 50 pips. So it's not that much. So or even less sometimes. So the 14 pips is give or take is not a big deal. I usually like to enter at, like, if I'm shorting, I want to enter at the top of this range level that I have marked up. And if I'm buying, I want to usually buy at the bottom, level of this range here. But the euro pound, we hit this level here. Euro pound, in my opinion, the way I would trade euro pound is more of a mean reversion style. So I wouldn't target the whole opposite end of this level here. I would more target like the 50% or the 38%. So if I were to get into euro pound, it looks something like this. Market order is fine. Stop loss above. I'd say something like that. And I'll target the 50 or the 38. I'd probably target the 38 better. It's not a good risk or reward setup by any means, but this is one of those higher probability trades where you're not risking a lot, but you're not making a lot as well. It'll probably smoothen out your equity curve. So that's how I would trade euro pound. And I've had success with it early in the year once doing that. So yeah, euro pound, especially if we consider that the pound is more resilient than the dollar. Not today. If we just look at currency strength, I could see on my left here or my right that euros are outperforming the pound. But for the most part, I do think that the pound is a little bit better than the euro. So that would actually be a good setup. If I had money in my brokerage account already, I'd probably take that. Let's see. Okay, someone wanted to look at euro pound. I would say, let's see, euro pound top setups. So another thing with the pound that happened last night, Bank of Japan, I don't know how to pronounce his name properly, but the guy that with his name, the gentleman's name starts with a U. He was, I could probably find it on Financial Juice, or I sent it in the Discord, but he was basically saying how, Japan is looking to stay in negative real rates until that target inflation comes back or closer to 2%. And that gave the yen some weakness overnight. If you just look at this was last night, right? Just straight bullish candles. Or no, this is not. What am I doing? 1 hour. When he had that talk, it was around 7 p.m., 7 p.m. Yeah, there it is. This bullish candle right here. That he was basically saying it was a dovish tone for the yen. So that in mind, and the euro also not being let's see, euro's getting a 5 reading on the eco only, and on the top setups I just saw that it was actually really bullish. Yeah, so I would say euro pound, yeah, bullish reading. I would say euro pound is or euro yen, I'm sorry, I'm pronouncing that wrong, is bullish. So how would I trade euro yen? There you go. Uyeda, am I saying that right? All right. First thing I see on a higher time frame, the euro yen is this. Some kind of a breakout, right? This is a resistance level, I would say. Drag this over here. If the breakout continues, I always look left to see for targets. I would say something like that. And we're already 50% of the way there. So risk to reward wise, I wouldn't jump in because, we've already started that move. It seems like we already had the retracement for it right here. We got bought into that. So yeah, euro yen, strong. I agree. But if you're not in there right now, market order wouldn't be the best thing, because then you'd have to put your stop loss. You still have to consider that stop. If your stop loss is going to be here, stop loss is going to be here, but your target's over here. Look at that risk reward. See 1.119. That's not really good. So now, unless we were able to wait and anticipate this move and get it on that pullback, then your risk reward, gets significantly better. So that's what I would always look, guys. And anyone can do this. What I just did is super, super simple. When you want to look at a chart, you just go, and I look at the daily, right? That's my preference. Daily 4 hour is you pull it up, right? The chart that you think you want to look at it from a super vanilla technical basis. The technical part is not hard at all. Literally, it's just like looking for horizontal. I look at horizontal levels and see how many times it's been touched, right? You can see like an obvious ceiling right here. So just mark that up. That takes maybe 30 seconds. And then you start filtering and going to your fundamentals, whether it be the edge finder or if you just do it by hand, which is really time consuming, I would assume. You just look at that and look at that. And then if you see that edge finder or however your research process is showing that this pair is bullish and you marked up your technical zones, look where price is right now and see if it's smart to enter or not. And if it's not smart to enter, if you're going to sacrifice your stop loss, or if you're going to have to size it more bigger because you think you have to make up for all those, extra pips that you just missed out on, don't take it. It's not worth it, right? Because at the end of the day, anything can happen. I don't know what's happening next. No one knows what's happening next. And you can get whipped out of it. And because of that silly mistake or because of the FOMO, you size in too big or whatever. Now you're sitting in a position. You're going to beat yourself up. You're going to say, why did I do this and this and that? We've all been there. So Yeah, euro pound, that's how I would look for. I went over euro pound. This is euro yen. I keep saying euro pound. Any more? Okay, Aussie CAD, Aussie CAD, Aussie CAD. All right, Alexander, you really like Aussie CAD, so I'm gonna do it for you. Aussie CAD, where you at? I must be blind, man. There it is. Neutral reading, not the best reading on the regular top setups. Let's look at the eco. Let me continue or include the minors. Aussie CAD -4 on the eco. Oh, Tiger, thank you for that. Oeda. Okay. All right, Aussie CAD, it's bearish. We had this big sell-off. We've recovered it, V-shaped recovery almost. And now we're just kind of flat. We've been chopping around. Price action doesn't seem too good for me. I don't like when prices are chopping. If I'm looking at it from a technical standpoint, let me see. First thing I see is like this floor here. If we just like ignore this sell-off, I see this floor, something that catches my eye. Super standard, but it's not I don't complicate it at all. And then I'd say something like this. I don't know. I'm actually not liking the price action on Aussie CAD, but you guys want to see it. And I think my time's almost up, guys. So let's see. Let me pull up Discord. That way I can be mindful of the messages coming in. Aussie CAD, if it's bearish, this is the range I determined. We're in equilibrium, 50% of that. Also not a great risk reward. Perhaps, and you know what? I don't know. I would wait for this level to get hit if I'm going to short. You know, given that if this level does get hit and you kind of reference your fundamental tools or whatever tools you use and it's still bearish, then that would be a better risk reward for anyone to take. But you know, right now we're literally in the middle of it, so it can go either way, and it's chopping too. I don't like that. So that is my thoughts on Aussie CAD. Is there a search feature on Edge Finder? Heck yeah, man. If I didn't have that, it'd be so hard for me to find stuff. There's a lot of data in a good way. It's always better to have more data than you need than not enough. But it is. So whenever you want to look for something, let's say whether it be the asset, the category, or the bias, right? Let's say the category or the asset here specifically. You see how you have all these different assets that you can look for. You can just type in like euro, and it'll put up all the euros. You see that? Euro CAD, Euro Aussie, Euro Swiss. Super simple stuff. And that's basically the same thing for every single little tab that you can think of. So COT data, right? A lot of COT data figures to consider if you want to just kind of just isolate one of them and look at one of them. You could look at the US dollar and it'll pull up US dollar. You can look at oil, it'll pull up oil. So yeah, it does have a search tool, which is really helpful because sometimes these lists can get pretty long. And so it's really hard for your eyes to kind of look for certain things. How can you trade Bitcoin on fundamentals? I don't trade Bitcoin, to be honest, like actively at all. Excuse me. I don't trade Bitcoin, but similar to every other asset, like literally similar to the approach that I just showed you, look at the chart on a technical basis, right? These are the zones that I've marked up, right? I've marked them up before. I've shown them on previous live streams. So, and I did anticipate this move here lower, and we got bought into that. So I'll just kind of re-put that in there for Bitcoin. But you mark up your levels on Bitcoin, whatever you think, whatever works for you, right? Everyone's technical approach works for them. So you don't have to follow mine necessarily, because if you are a lower time frame, like a 15-minute to an hour time frame trader, then my zones may not be that helpful. Or on a weekly time frame, it's different, right? Different for everyone, but use the technical approach that works for you. And then you would just kind of filter and look at the same type of criteria that the Edge Finder uses. So, and if you don't have the Edge Finder, you can look at different things, right? You can look on each thing that you see here. You can find it somewhere. These are all public, but if you just look at, I'll show you COT. It's at the CFTC website. Commitment of traders data. You find the asset that you want. Let's see. That's a Chicago Mercantile Exchange futures only. This is what you're gonna find, right? You're gonna find the asset that you want, and it's gonna be a report that looks like this. So then by hand, you would look and be like, okay, net positioning. This is what got taken out. This is what got taken in, and then you find your net positioning, and you do that for every asset. And you do it that way. And then for CPI is a whole different thing, a whole different resource. For GDP, you find it elsewhere. You can find them manually and write them down. You can create a list. But then you kind of have to do that for every single asset, because especially in currencies, because when you're trading two economies at one time, you have to do it for both columns, compare and contrast. It can be a little bit time consuming, but it's possible. But if you have the Edge Finder, it makes it really easy. Chris is here, guys. You guys are in great hands. Thank you guys so much for having me. It's always a pleasure being on here. You guys have a blessed one. Trade safely. Jesus. Goodbye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. I think Alan said it best. Save Tradely. Yeah, that's what I do every day. Save Tradely. Markets are slow. I think that this is the calm before the storm. We'll have some exciting news on Wednesday, Thursday, Friday. CPI data, PPI data. See what the combo is. We have the Fed next week. This might be a really simple look, but watching pretty much this. I mean, I'll go to a chart that shows some technical resistance / overbought conditions, divergence. I mean, all the alignments are right there, but I keep going back to this. If we don't take out a low, the bears aren't participating. Like this is all bulls. This is all melt up. I think that it's overextended. I think that's expressing itself on the charts a lot. The market has slowed down quite a bit, but this grind continues. And this grind is fine. So I still think it's a buy the dip. I think that I've been looking at, is it Ives? Yep. So Dan Ives is putting together like 30 stocks that this kind of just came out. So I don't know if this is going to be the greatest thing ever. It's just a way for this guy to make money with basically an ETF. But the whole play, I think I'm going to look at a trade on Micron. Gosh darn it. This thing's just running hot. So does Micron get back to highs at 157? That's up another 38%. That's not bad. One pretty cheap way to trade this would be, okay, let's see if we get to all-time highs, 157. Let's go Micron. If I went out, let's say to the end of the year, either December or January, Micron highs. I just want to see if I can take like a cheap credit spread. So if I do like a 150 by 160, I want to see what this fills in to be. So for $1.72, I can make $820. Like that to me is a pretty cost-effective trade. If Micron gets back to these highs, it's a really good asymmetry trade. Now, you know, I realize like there's resistance here. It's kind of struggled. It's like 113, 114 handle. I'm going out far enough that I don't need price necessarily to blow through the highs. I just need price to keep going up, right? So, I mean, if we have a pullback, I'll probably do more 111 trades here, um, and look to participate. But this is a cost-effective trade that if I'm right, it offers me like 3-to-1 or 4-to-1. Okay. So I don't mind a trade like Micron. It's not that expensive. You know, AMD, kind of the same type of thing. Does this stock have what it takes to run back up to like two and change? Maybe, but Micron looks pretty good. In fact, let me look at the fundamentals here on Micron. So Micron, just make sure I'm not jumping ahead on some fair market value stuff. Snowflake looks pretty good. Checks a lot of boxes. It's not terribly expensive at this point. This is kind of the hardware side of AI. I don't love this, right? Like current price 111, you know, trading at 113, fair value is 75. I don't love that. Compared to Qualcomm, I mean, it's like it's kind of cheap. Qualcomm is what C? It's QCOM. So 157 with highs at 230. Well, I mean, Micron is getting some love. So a couple ways to consider this. Either one is I buy the inexpensive, you know, debit spread that I pay 175 bucks to make 825. The reality is if I turn that 175 risk into like a 175 winner, that's a 1-to-1. If I turned it into a 350 winner, that's 2-to-1. I can potentially make more than that, right? So if I held it all the way to expiration towards January, I mean, max profit would be 830 over 170. It's about a 488% return on risk. It's not a bad potential trade, but for me, because that asymmetry is so promising, I don't want to necessarily hold it all that time. If it gets up, like I said, if 170 risk becomes 170 in profit, 340 in profit, that's pretty good to just take the profit as price is cooperating going up my way. Okay. So, couple things. I'm going to look at if I can get maybe a ratio spread back down below 60 bucks. I don't think I've already taken profit on a couple of Micron trades this year, and I do not have it on the portfolio right now. So let's go. I don't know what the option prices look like. They might be okay. They're not bad. If I'm seeing dollars in here for the premiums, it's not bad. Working order. Oh, I already put it in there. So I have the trade. I'm looking for a pullback. All right. I guess I'm a little smarter than I thought. So I took the trade. I took the trade already with a pending order based on a potential fall. So initially I did this. So if we pull back, you know, I could just take the trade now for about $1. But if we pull back and we have like a VIX increase a little bit, I would, instead of just pulling in $1, like if I did the trade right now. So let's say I do like a 65 by 60, just throwing it out there. This is a 6250 by 60. So this is the trade that I put in. A 6250 by 60, make this a ratio spread, I get $100 of income. Okay. So this isn't a bad trade. What I'm trying to avoid is if I, you know, deploy these trades now at $100 and the price is going to drop. Let's just say we go from like a 113 down to, you know, 104. Well, that's an extra $1,000 of risk. So I do this on, you know, 15 accounts, and that's $15,000 in a drawdown. Even though the probability of profit is still extremely high, that's a 15K drawdown. If we pull back to $100, that's $1,300. That's $13, $14, $15,000 in drawdown. You know, so I don't necessarily want to see that type of drawdown, even though the probability of profit remains very high. But I'm just curious if this is going to be like is the market just is all the market cares about is just get this trade war settled. It's all about AI. It's, you know, quite disruptive. So, I mean, can we get to these highs? Possibly. So I think, to me, it's like I'll do this. Let me see if this is cost effective. I'm going to go out a little bit farther. I mean, if we're truly getting like an AI run, let's go like summer of 2026. Can we get through this like liquidity pocket? Is AI the greatest thing ever? Let's look. 150 to 160. I want to see what this trade cost me. What? It only cost me $1? There's no way. No, okay, never mind. That's what the ratio spread. So 50 by 160. Okay, so it cost me $2 to make 8, right? $2 to make 10 gives me a net profit of 8. Give this some more time. If we go up to all-time highs and exceed it, I think this is a pretty good trade. Paying 290 to make what's reward to risk? So 1210 divided by 290. That's a 417% returned. It's not bad. What are the highs here? Highs at 157. So if I go 155, 165, that's not bad. 230 to make 1270, or 150 or 804 to make 804, 196. So 400+% potential. Not a bad trade. I don't mind this one, which is slightly larger. So 808. That's 420 versus 250. So go 1250. All right, I'm going to do this one. So I think for 275, it's a pretty good trade there. And my goal is to turn this debit. If I'm risking $270, my goal is to turn it into a trade that offers me $270 to $540 profit or more. Okay, so let me see if I can get filled here for like 250 on this trade. Let's see if this will fill. So 250 not filling. Let's try 255. Just above the ask or the bid price at 2. Now it's 260. All right. This might be a little more slippery than I want. Hopefully we're not paying more than like 275 for this trade. 265 not filling. 270. Come on. What? All right, just got filled at 280. So that trade's in 280. I'm going to take this for, I'm just going to highlight the accounts here and just knock them out one by one. Not a bad trade, not a bad trade, not a bad trade. Okay, so everyone's going to get some love on this one. That was filled. So similar order. I should see this pop up in all of these accounts. Yes, so 280 is the fill. Okay. All right, a couple more counts, and then I'm good. Okay, so I'm gonna add this into Pulver Alerts. What the heck? See if I get this filled at 281. Yep, 280 got filled. All right, that's fine. So now, let me find my tracker here. Put this in. So this is Micron. Buy the 155 call, sell the 170 call, paying $2.80 debit for a $15 max credit. Okay. So basically the trade is up here. If we see price, appreciating, that is good. If we get back to all-time highs, that's even better. So this is a trade that I'm looking for. We get here. It's a nice win. So that is the 155 by 170. So 155 to 170. Okay, so that's the trade. So there's two ways that I'm trying to play this. Okay, one is cost-effective debit spread that gives me, potentially $15, so $1,500 of profit for a 280 debit. And then the other side is if we get a pullback, I'm trying to set up a ratio spread down here with a 62 by 60, which means I would be willing to own the shares at the lows. So if price goes up, this one looks good. If price comes back down, I get filled on a ratio spread, and we'll see what that result. I mean, I don't mind owning the shares, but I'm going to own them cheaper. I don't want to buy it at 114 bucks. I want this to go up and try to hit some all-time highs. Okay, so I'll get that posted in Pulver Alerts right here. So Pulver Alerts, stock option trades, new trade. Micron, make sure I get the expiration correct. That was a 6/18, yep. So buying the 155 call, selling the 170 call, 280 debit for a $15 max credit. This is an out of the money debit spread. And if MU is nearing all-time highs, looking for this trade to offer 1-to-1 or 2-to-1 reward to risk for profit protection prior to expiration. Okay, so build that trade out, copy and paste, Pulver Alerts in 10 seconds. There we go. Posted. Okay, that's a little Micron. We'll keep an eye on that one. Also have the pending orders for that that pullback. Markets again today, pretty calm. Like I said, calm before the storm. Watch that rising wedge. There's going to be some, I don't know, there's going to be something exciting happening this week. I just don't know what direction. I mean, if we get the market excited about better inflation, maybe it prints hotter. Maybe the market doesn't like it. We've been watching the kind of the truth reading for a little bit. We have been elevated off these lows a little bit. So, down here at like 1.22, now up to 2.08, fading a little bit, but still, we've come off the lows. We've had headline CPI hit a bottom at like 2.3%. It's forecasted for tomorrow to print at 2.5. Okay, so if you go to the Bloomberg calendar, that's what I'm looking at. It's basically Wednesday, Thursday, and I'm just watching the year over year. That's what I'm interested in for tomorrow's data is the headline CPI year over year and the core CPI year over year. Both are expected to be printing slightly higher. So your core CPI month, or I'm sorry, year over year, right here. Previous is 2.8. It's forecasted for 2.9. So market's anticipating a slightly higher print in CPI. And then you go the headline CPI year over year. Previous was 2.3 and forecasted for 2.5. So both expected to see higher CPI prints. Now, if the market prints tomorrow, let's say that we print 2.4. So headline CPI is slightly higher than previous, but better than expected. Maybe that's a good thing for the market. I'd say maybe the downside would be if we print like a 2.6 or higher, right? Or this prints like 3% again or higher. I don't know if the market's going to take that with a lot of, a lot of positivity. I don't think anything is really going to derail this market. I think if anything, what you need to focus on is this market going to offer up dips? That's it. I mean, in this environment, if we're going to spend $2.5 trillion and pass a tax bill by July 4th or by Independence Day or whatever this, 11th hour holiday is going to be for Congress to pat themselves on the back, any pullback opportunity to me is a chance to position options for income or, generate. It's like if I'm going to own something, I'm going to own the SPY like way, way, way lower. Otherwise, I'm just going to look at income trades. Okay. What up, dude? So anyway, any dips, that's what I'm looking at. I don't know I don't know the why. Like if this pulls back, why? Is it higher inflation? Is this something that Trump said? Is this something with this 90-day pause? Who knows? There's going to be a ton of reasons why we can see it while it's happening or after the fact. I just think that we need to be ready for, if we have a pullback, I'm ready to take some action. I'm going to deploy some capital. Okay. If we have a pullback, I'm going to take some action. I'm going to deploy some capital. If I'm going to own shares, I'm going to own shares at the freaking bottom. So I don't care if I just do naked puts. If we have a pullback and I sell a put right here, probability of profit is extremely high. I might have to sit and navigate a drawdown, but if we just go sideways, eventually that time decay works in my favor. And if it's a SPY put or a Q's put, maybe it's worth a couple $100, right? Out 40 to 60 days, maybe I grab another $300 to $500. Do that on 15 accounts, make another $6,000. Okay. Like I'll do it. If I'm going to like buy the SPY, then debit spreads, right? Like look at some debit spreads, try to get back to all-time highs. I kept asking this question, but we're right here just shy of those all-time highs. If this market turns right before we get to these highs, I'm happy with that. Like I want to see a turn before we get to all-time highs. But I don't think it would surprise anybody to see the market blow this high out, okay, or test this high and then fade a little bit. Okay. And I say a little bit because like above these moving averages, the bulls are absolutely in control right now. And even a break of this trend line right here, even a break of, let me zoom, let's go 4-hour chart. Okay. Even a break of this trend line here. Okay. That trend line is a bit more aggressive. I would go slightly like that. Like that trend line, connect the low here on the right side of the trend line, connect the low here, connect the low here, all these support levels, like that's the trend line I'm watching. So that gives us a chance to see, okay, is this a rising wedge? Maybe it is. But nobody's going to be shocked to see this thing melt up higher, 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 poke the all-time highs. And like I keep saying, if the bears take out a low, then this market's interested in some type of correction. I don't necessarily want to trade that outside of maybe a cheap hedge. A cheap hedge at the top, take a $250 to $500 risk, try to make 3 to 1, 4 to 1, 5 to 1, whatever, and do that over like a 90-day window, maybe 120-day window. That's kind of it. Because other than that, it's like I think it's just any dip we're offered is a chance to buy the dip, and this market's going to melt up. So, I mean, what's our big drama point? Well, we got inflation news this week. See how the market reacts to it. Then we get into the Fed, and then all of a sudden it's like going to be the end of the month, and it's holiday time, and there's this big beautiful tax bill, whether it's going to be passed or not. I would assume that it's going to be passed, simply because I mean, you have a president that would go so vocal and so ballistic if it doesn't get passed because it's going to derail the agenda. Even though that agenda is adding $2.4 trillion and this whole idea of Doge and austerity is crap. it's still, you know how vocal he's going to be, you know how threatening he's going to be if this doesn't get passed, right? Like he'll put everyone on blast. So anyway, that's what I think. Any dips, I'm looking to position options. If we hit the all-time highs, don't be surprised. If we have a pullback, I think it's an opportunity just to reposition for some more income. This market is just not turning over, right? This little Elon Musk and Trump drama last week, not turning over. Like we had a, but what to do the next day? Gapped higher. Like this was like Musk and Trump drama, and the market ended up gapping up over 1%. You know, it's like it doesn't care. It doesn't care right now. So until these lows are taken out, the market doesn't care. Okay, I'm going to adjust this trend line actually to this. There. That trend line to me is a little bit more in line with how price has been behaving. This support back on the 7th of May to the 23rd of May to the 30th of May. So there. If we take out any of these lows, then yeah, the bears are likely going to get the control for a moment and try to get some pullbacks. But we're probably poking all-time highs first. I mean, is today, what's a 6,000 credit spread today? I'm just curious. So we're above it. I feel like that could offer up some potential support. So what's the 6,000 handle today? It's not a terrible trade. 5 wide, get a $1.30 if we stay. It's a 6,000 handle. Let me see if I can get a broken wing put fly in here. Butterfly, put fly. See if I can pin this thing around like 50. I don't want to be super aggressive here, but if I pin this thing around like 6,000, 30 cents credit with a profit trap. 65. It's not awful. Are we going to break this level? This could be a trap at the end of the day. 20 delta. Let's see. Do we just hold the 6,000? So 5 wide. Let's see. I kind of like the butterfly angle if I can take it. I think I'm going to take a butterfly today. So if I went to, let's go 59.95. Gosh, I hate this trade. I hate like 30 to 40 cents. I don't make a lot of income on the trade. I've got a trap, which is, my warm and fuzzies of if price were to come back down to the 6,000 handle by the end of the day, that seems to help. I just think this market's going to be, I mean, we broke intraday highs. We broke yesterday's high. Is it just more of a melt up? I mean, I've got call sentiment that's way higher than put sentiment right now. There's not really a resistance handle until like 60.50. Here's what I'm watching for some of my levels. So we have, 60.40 today, a 60.50 today. Choices. Do I like this trade? I'm going to take this trade here, see if I can get filled for, maybe I get filled for, let's see, $1. This is wishful thinking. I'm going to take this trade for $1. My risk is going to be about $400. I'm going to see if price will stay above 59.95 today. So this is a pending order. It may not fill. If price melts up this morning, it's not going to fill, which is fine. But I'm going to put that trade in. All right, let me get some questions. Lee says, what do you think of dollar CAD on the day chart? Level support to me is like 3,200 to 3,000. So we've got to be dropping. Yeah, it's not low enough, man. I don't think this thing's low enough. To me, this is support. 3,400 is my support. 3,000 would be like the ideal support. But I would say, this level or this level, I would just wait. Oil's looking to potentially break out above the 65 handle. That could push dollar CAD a little bit lower. Between 34 and 32, that to me is a much stronger support zone to buy. So I don't see this as support. This is just kind of noise. I'd rather buy it down here, 34 to 32, or wait for a trend line break. Currency strength chart for the day. An interesting move on the pound today. Aussie's getting a breakout up. New Zealand as well. Euro. I'm sorry, that's CAD. So Aussie CAD on top today. Swiss dollar yen in the middle. Pound got beat up a little bit this morning after the 2 a.m. open. So there's your London breakout. Just a big move on the pound. I say big move. It's like 25, 45 vertical axis. It's not crazy volatile. It just looks like it's out there. I mean, even yesterday, like very quiet in the Forex side. I do wonder if the Forex market gets a little bit more exciting in 2025. So far, it's been outside of your big dollar move. I mean, the dollar has been crushed all year. Outside of your big dollar move, I don't know if the Forex market is going to get super exciting unless it's something on like more dollar basket, more yen basket, and maybe gold gets more exciting for the Swiss. If we get a pullback and hit that 200 moving average, I'd like to see the Swiss get a little bit weaker so I can get my carry trades to pay out. Pound yen, I'm seeing the pound yen come in. Pound yen, just noise. I just see noise. So, I mean, resistance would be previous highs, support. I mean, it's just noise. So if it's gonna, I mean, pound yen to me is a scalping currency. It moves enough from London session to U.S. session. It moves enough. It's like align your time frames, get your 1 minute charts up, and see if you can scalp that thing for some precision. That's, I mean, most traders I've seen that have success with the pound yen are doing that as opposed to like these big position trades. So if it's lined up on the 1 hour and the 15 minute and the 5 minute and the 1 minute, just looking to kind of follow alignments and keep it simple and try to grab 10, 20 pips. Currencies can move. This currency probably still moves 100 plus pips a day. Okay, so all right, what else? Let's do, speaking of dollar, let's go dollar, oil, gold, silver, some Bitcoin. Do some individual stocks if you have them. Do some currencies. Dollar wise, still pretty choppy. My euro dollar position is still running. So I'm up about 230 pips. I'm trying to get a poke up here towards the 15 handle, fit 1.15, 1.1550. That's my take profit. So I'm going to hang in there. Dollar index, I still think just be careful of selling into these lows. To me, I think this would have a bear trap written on it. If it pokes the lows and it's a bear trap, it wouldn't surprise me if we come back and range trade. Same thing in the bond market. I could see it being a bear trap. I think there's a lot of consequences if the bond market ends up going lower. So, TLT at 85, it's like it gapped up today. It's fading. It's just hanging out right here. I mean, again, this could be a bear trap where we have lows, right? We have lows. I know there's some like perma. It just depends. I mean, maybe this is a really crowded trade that's like everyone's buying TLT and it has to flush them out first and then it reverses, right? I mean, there could be some manipulation on that trade, but I would think that if this level holds, it's going to be really critical that it holds and we just have a bit of a squeeze to the upside. Could be a short-term squeeze on bonds, right? Two things, right? Bonds squeeze up, that means yields can drop. If bonds squeeze up, you got to wonder if that brings the equity market down. Like, is this going to be a safe haven move at all? Because if we have safe haven and it pushes bonds higher, that brings yields down, that brings equities down with it. So if that's the alignment that we have or the correlation for a pullback, okay, maybe the bond market gets a little bit of a squeeze. Okay, so got to watch the dollar, got to watch bonds, gold and silver. Here is, let's go oil. So oil, like I said, starting to break that 65 handle. The resistance has been pretty consistent at the 200 moving average. So if we get up to the 200 moving average, okay, fine. This is another reason you want to be watching inflation. What happens if we're breaking above 68 to 70 bucks? This has to be a higher inflation environment, if you ask me. If oil is up and energy prices are getting a bid, this has to be a higher inflation environment. This is part of the reason I think inflation has cooperated so nicely is oil has been suppressed, and pushed down to lows. And all of a sudden, if oil starts to let loose to the upside, I think that's going to potentially spur inflation all over again. Maybe not to the tune of 9%, but certainly to make it sticky where we're not getting down sub 2%. Okay. So, I was talking about being long oil in here when we had that test. That worked out pretty well. I still just didn't love oil. I think it's still very volatile. We could, hit the 200 moving average and turn right back around, and it just proves that this is still like heavy resistance. So I'm not quite taking the bait on this thing going higher, but if we are, spending some time above the 200 moving average and pulling back, that could be a good spot to look for some follow through. Are we going to $100 a barrel? Probably not. But I'd say I was surprised to see this floor break and immediately hold like 55. So maybe again range bound trading. Maybe it's like a 55 to 75 ish. Like maybe that's our range on oil. I honestly haven't taken a trade on like CL like oil futures or oil for a while. And I probably won't. I think gold is better, silver is better. They're easier to read. Other commodities are better. I'm just going to stay out of oil. I think there's a lot of supply and demand manipulation. There's OPEC. There's demand with U.S. China. Does the world need it? Do they not? Are they moving away from it? I don't know. It's a weird instrument because ultimately I feel like the world's trying to move away from it, but yet it's integral to current energy infrastructure. So I just don't have a clean read on oil. Natural gas, I'm still selling calls. Let me see if I have this one out. I don't think it's expired, but let me check. So I have the 17 call out to July, or I'm sorry, June 27th. So out 17 days, trying to sell the 17 to turn this into some income, small income. Gold. I'm still hoping for a pullback into, it may not be a pullback. It might just be consolidation. We might just consolidate here, right? Price can just kind of grind up higher, hit resistance, come back down again. But if my moving averages, this is a 100, this is a 144, this is a 200. If they catch up, that to me is a justifiable, like, okay, we tested. We didn't really fall to it, but we tested it. Okay, so if we at least test this 200 moving average, that to me is a buying opportunity to still remain long and position for, kind of a store value, anti-dollar, just different reserve, different store value than the dollar. Okay, Mario says, should I sell my Bitcoin? I would say no. I'm not selling Bitcoin. I think Bitcoin can pull back, but I think Bitcoin has, plenty of upside potential, 125, 150. You give it time. I think that this becomes like a game theory, self-fulfilling prophecy. If the fiat system breaks, Bitcoin offers a pretty strong alternative. I mean, we're at like 2.1 trillion market cap on Bitcoin. I mean, if it gets to, what's gold's market cap? 8 trillion, something like that. I mean, what's the market cap of the bond market? 5 trillion, 10 trillion. I mean, if Bitcoin takes just chunks of those, it's like there's plenty of price appreciation. So I'm not selling. I am only accumulating. All right, we good on gold. So I mean, consolidation is kind of what's happening now. Silver's outperforming. That to me has been, my trade I've been beating the drum on for months, and it's starting to show promise. So I mean, I think that silver naturally like runs up hot and then it pulls back, which is fine. So if we pull back into, this previous resistance zone, let me draw a straight line here. If we pull back into this resistance area, is that going to offer some support? I think that's a good trade. So does silver pull back a little bit and then we continue to go higher? I mean, that's what I'm looking for. I want to see higher highs in silver. Okay, if it pulls back deeper, that's fine. As long as we don't take out like 26, I'm still holding silver. But I'd obviously like to see this continue to make higher highs and higher lows. The chart to me looks pretty good. So whether this is, is that a channel? Like so? Is that a channel where it's, up, pull back, little noise here, up again? Does it pull all the way back to this channel? Still supported, but maybe it's going to be the slow behavior, which is fine. Or could it run with a little bit more conviction? Maybe it runs up here Just a little bit of a flag pullback, and then silver's off to the races with some open space. Greater than 40, all-time highs at 49. That's ultimately my profit target right there. Okay. So, and I say profit target, like, I want to hang on to it, but I don't know. That's a good trade if you ask me. Taking this from basically basing my position all the way back here, adding to this exposure, accumulating some more, and then hopefully getting the benefit of all that accumulation into a run into $48, $49. So I think silver looks pretty good. Bitcoin at 108. What was that news there for Blackstone? Major opportunity eyes $500 billion. Oh, Europe. That's just cheap. Yeah, buy Europe. Okay, I get it. Let's see, Lockheed Jet deal. Okay. Interesting. JP Morgan says sell Tesla. Well, let's see what robo-taxis look like in the next 3 months. I think Tesla's still a buy. Also, we talked about this during the quarterly expiration for like the OPEX cycle in March. We're coming up to April, May, June. That's Q2. By the end of this month, we have another OPEX cycle for the quarter, the month, and one thing that's going to be interesting by the end of the month is SPX. If we've talked about this before, I want you to write this number down: 5905. Okay, this number is supposedly the range on JP Morgan's kind of quarterly collar trade. So when I guess it would have been forced trade either March 30th or April 1, it would have been establishing like new levels. I don't recall what the option chain was. I feel like I wrote it down somewhere, but it's basically like a 20 delta out the quarter. So you're going out about 90 days and you go about 20 delta. So, put side would have been down in like the 47s or 48s. And the call side probably up here. Like this is the number that I'm reading on some of the gamma stuff that I've been seeing in the markets, 5905. So my point is by the end of the month, just throwing this out there, and we can come back and reference this just because we talked about it. But by the end of the month, don't be terribly surprised if by the end of the month the SPX is down to 5905. So we're trading at 6020 right now. We might go up to hit these highs, but by the end of the month, I wouldn't be shocked to see this thing get to 5905 or lower. I still think it's a buy the dip, but this avoids the delta hedging to hold these things higher. So usually these numbers are huge. Like this is a monster gamma level, 5905, and I think it's something to pay attention to. So just throwing it out there by the end of the month and this quarterly, monthly cycle that we have for option expirations. If we're below 5905, I'm just going to put this on my chart so we're referencing it. So end of June, 5905, JPM call side. Okay, I'm just going to make a reference to that because I wouldn't be surprised to see the market either one, get up to these highs with a melt up and then fade back down, get back below 5905 before the end of the month. Wouldn't surprise me. Or it gets down here first to stay below 5905 by the end of the month, and then July continues to take off with a bullish trend. Okay. S&P. The heck's S&P? Is this a thing? Snap. What is this? Is this anything? Or is that a typo? Chloride, chlorine, soda, bleach, chemical, automobile. I don't know. Is that even a thing? Oh, S&P. Oh, there's this. You can type in S and because they are. It's like S&P has been positive off of this like reflexive pivot from the Trump administration, and gold is basically taking its play from a weaker dollar. So it's not that hard. I mean, correlations don't have to make sense. You know, I mean, gold is sometimes seen as a safe haven, and other times it's seen like this year, gold has kind of reasserted itself as an asset as opposed to a safe haven, right? Like gold is an asset. So rather than owning dollars, own gold. That's why gold's bullish to me. Okay, S&P, because everything is pointed towards trying to get this market to go higher. How do you do that? Well, you don't cause a global trade war. You pivot on that. You try to get this negotiation garbage. And here we are, back above a lot of resistance levels, and the market is drifting higher. So S&P can go higher, gold can go higher, Bitcoin can go higher, risk appetite, like risk on can go higher. That's the thing. I mean, I'm still a dip buyer for most of the S&P and the Qs right now. I think Russell is making a pretty good little comeback. We are on the right-hand side of this trend line. I wouldn't be shocked to see a pullback here, but having a Russell pullback that gets us into, this level, I'm not drawing that very well, but somewhere in here, if we pull back to this area, I think that's not a bad spot to look for some accumulation. Even if Russell is boring, still accumulate. But will Russell end up making a catch-up trade? Maybe, right? Price to earnings on Russell is a lot cheaper than price to earnings on S&P. If we see rate cuts later this year, maybe that helps spur the Russell along a little bit. Maybe. So there's the point here is like if the S&P hits all-time highs and the Nasdaq hits all-time highs, and the Russell's still 14% away, money's going to go where it has opportunity. We're still 14% away from those highs. We've got all-time highs in Europe right now. We've got all-time highs in the UK right now, or close to it. We've got flows like non-US. Everything non-US is done pretty well in 2025. But a stable US is a good thing. So anyway, let me see what that broke wings butterfly is doing really quickly. See if that has any chance of getting filled today. Trading for whopping 17 cents. So most likely not going to get filled on that, unless maybe I get filled for 50 cents. But yeah, I think this market's just trying to melt up towards like 60.50. All right, anyway, that's S&P. S&P's up. Russell is pointed higher. I think Russell looks good. Even if we have a pullback here, we're above the moving averages. A pullback, not bad. I mean, is Russell just going to be an awesome index? I don't know, but it's 14% to get back to the highs versus 2% on the S&P versus 2% on the Nasdaq. So if there's a catch-up trade, that's a pretty good one. If small caps close the gap between large caps, that's a good one. Is it the best trade? I don't know. Not really. IWD, this is top 1,000, so you get out some of the crap. Here's top 200 growth, and here's top 200 value. These are doing way better. These are way closer to the all-time highs. So if you can you've trimmed the fat out of the Russell, you get the cream of the crop. You're getting a lot better performance. You're a lot closer to all-time highs on top 200. So it's not as good with option trading. I'm still, I bought IWM for covered calls. I'm still going to keep rolling those covered calls. But for the individual buy and hold, like this is a much better alternative just because you're getting rid of so many companies that don't make money. VIX, by the way, congratulations. We just witnessed the largest volatility crush in history. So going from this to these teens, that is the largest and fastest move to the downside in volatility index history. Doesn't surprise me, but something that just makes like that event in April, March to April, makes that event even more noteworthy for that April 7th bottom. Move index bond volatility has been decreasing. We did oil, we did gold, we did silver, we did Bitcoin. Bitcoin is at 108, pulling back a little bit. I'm gonna set a chart on here at the 112. Do we break some fresh highs? Let's find out. Okay, maybe some of this, maybe up, maybe a little consolidation. Maybe this is a bull flag. I'm hoping that Bitcoin is not this. I'm hoping it doesn't pull all the way back to 75 again. I'm hoping this is up, a little sideways, and just more of a bid. More to the upside. Ethereum. I mean, it's looking better. I've said this as a look. If you're a trader, Bitcoin is like, to me, that's an investment. Ethereum, with this potential catch-up trade, I like this trade. If you're long long Ethereum, area 1, have a little reserve status for area 2. Don't take out the low. That's your stop loss on the swing. And if this goes up and catches up, that's a good looking trade. I think it's a good trade. It's a trade. I'm not going to hold Ethereum long term if I want to take this trade, but that to me is a good swing opportunity. Copper, we'll see. I've got a lottery play here in this little green zone. If we come back to this, it's like a $90 risk for a $1,400 reward. I have to see copper go choppy. Japanese yen still long. I'm still long with FXY. Nikkei, let's check the Nikkei. Pulling back a little bit off these recent highs. Let's set another chart alarm here. I'm long shares of EWJ. So I want to see if the Nikkei can continue to grind higher. This is the basically the top 85%. Well, that's a lot. It's basically getting rid of the bottom 15% of the Nikkei 225. That's why this ETF looks better than this. We're still way above this, the July breakdown we had in the Nikkei last summer. This was July to August, and we're still way below those levels. Does the Nikkei play catch up at all? Well, if so, that's 11%. Can the EWJ, get the same type of pop to the upside, get another 10, 11%, but go from 73 up to 80? Well, I own the shares at basically 65. So I'm going to hang on to this one. DXJ, another one to trade some Japanese yen. DAX, I'm looking for a pullback here for DAX. I'm playing the Fez, which is just the Euro stocks, selling some puts. FTSE, just shy of these all-time highs. I think this would be a good-looking bullish pattern if it's offered, right? If you have a low, high, a pullback in here, does this market offer any type of accumulation before it goes higher? Maybe. I mean, I've heard a lot of different opinions on, UK, whether it's a strong economy or not. I still think like this reality of a non-US year, like having a lot of things outperform the US because it's just not that expensive. Euros, like the Eurozone price to earnings is like 12. US S&P price to earnings is 22. It just naturally means like there's more upside potential with a cheaper price to earnings than there is the S&P. The S&P is kind of priced to perfection. Things have to go really, really, really well, and I think it's okay. But I've showed this. We'll talk about this more next week in our little half year review. But historically, when the market is at 21, 22 times earnings, 1 year to 10 years out, the returns are not that great. So unless we have, another melt up where we get to 23, 4, 5 times earnings, and all of a sudden it's like, okay, a correction is very, very soon happening. Or we have like a reset where we get back to like a 16, 15, 14 price to earnings, and then things all of a sudden return to be like everything's on sale. Okay, I do want to check one thing really quickly here. Give me 1 second. I was going to go to the SD5, SF5. Ah, fudge. S5D. It's the number of stocks in the S&P above the 50-day moving average. I think it's S5 something. Yeah, S5FI. Come on, everybody knows that. 73.61% of stocks in the S&P above the 50-day and 49% above the 200. So what's interesting is this is also kind of a make or break for the market right now. We have like 50% of the stocks are at the 200 moving average, or let's just say they're less than the 200 moving average. Okay, so you've got half of them that are less than, and the other half that are more than. The 200 moving average is a pretty big buy zone indicator, and if we can get this market breadth to continue to push higher than this, okay, if it pushes higher than this and all of a sudden we have more than 50% of the stocks above the 200-day, then I think there is more room for this market to continue to melt up. So that's why I mean that's why I think we paused here on this 200-day indicator. Market breadth to the upside on the 50-day. I mean, this could be the timing. I mean, maybe the 50-day gets up here towards these levels where it's like, okay, a pullback is needed. You know, I mean, I don't know how aggressively I want to short the market there, but I think for at least taking some profit, reallocating, readjusting your percentages to make sure you're not overexposed and having like one stock I put 1% is up 5% of my portfolio now. I mean, scale it back, take some of those profits, protect some of those gains because a correction is likely going to happen. You know, I mean, let's look at this. Last time we had a correction here, this would have been December of 2023. Okay, so I mean, let's just say last time we got up here, December 2023, what did the S&P do? December 2023, what did the S&P do? S&P December 2023. That would be here. So did the market fall? Yeah, a little bit. I mean, we had this was a Santa rally, didn't appear. There's a 1.65% pullback. There is about 2.3% pullback. So it's not perfect. It's not foolproof, but still it offers pretty good timing for at least taking some profit. Okay, so we'll keep an eye on that one. Before that, in December 2023, you would have had the summer correction, which certainly was a decent one. This was a good one in July of 2023. So go back to summer 2023 on the S&P. Here you go. This is a pretty good correction. So that timing with the 50-day moving average, we had a nice pullback here. This is around 10%. So I could see that. What was this high to low? I think it was around 10%. Yeah, almost 11% high to low from that July to August, July to September. When did this end? Yeah, July to October before we had that Q4 rip. So is it possible that we have the same type of market breadth indicator where it's like causing a bit of a toppy pattern? Maybe. Okay. So just take a note of this. End of June, big JP Morgan. It's like their giant investment fund, and they have a put side that's probably just way out of the money. That's easy peasy, but it's the call side that if it's forcing hedges around that position, they tend to usually act as a really good ceiling, and usually prices stay within those two big levels. And 59.05, from what I can see on the spot gamma, is the end of the month. So end of the month, end of the quarter would be 59.05. Okay, so I'm curious how it gets there, whether it goes up and then falls, or it goes down and stays, and then after the quarter, then it goes back up through July if we have a bullish July. Usually, last summer July was a topping month, right? Last summer the market topped out in July and fell into August. August, September historically are pretty corrective months. We have tax loss harvesting. You kind of position for Q4. So I don't know. We'll see. But we got a lot of stuff going on in July. I mean, once we get through the holiday, we've got the tax bill. We'll see the 90-day pause window, whether it's going to be another extension or I don't know. I don't think the market's going to be breaking down because it's like how, again, kind of self-inflicted. You put on this 90-day window and then you don't resolve anything. So what are you going to do? You buy more time. Like worst case scenario, I think Trump and co buy more time. They maybe push another 90-day extension. Maybe the market likes it, maybe it doesn't. But what will likely not happen is we're not doing this again. We're not doing like blanket trade war tariffs. We're not scaring the world again. I think that was a hard pivot. So now it's going to be, what do we have to do to kind of soothe the narrative and still growing and talking about growing our way through this deficit and growing our way through these debts, growing our way through increasing the deficits by $2.5 trillion. That's the narrative now. So to me, that looks like it's a hopeful dream, but the reality is money supply is still going to come into the markets. $2.4 trillion is still adding more liquidity to the markets, which means that's global money supply that is debasing the dollar, and that's still a good thing for gold and Bitcoin. That's still a good thing for assets like owning stocks. It doesn't have to be that hard, So the only thing I would say with a pullback would be if we take out lows, look for a pullback. That's fine. There's a lot of trade opportunities with a pullback. Okay. If we keep going higher, we're going to eventually have to have some type of corrective move But I still look at that as okay, so corrective move that pulls us back into where? 5,800, 5,700, and then this is a giant head and shoulders. We break this neckline, measure this thing, and there's your top. In my opinion, if I was going to be bearish in the market, it would be at the measured move and extended head and shoulders pattern. Like if we break this neckline, this thing's going. I mean, we'll go. This is a 25 to 30% move. Then we could go that to the upside. Like that's what's crazy. This thing could melt up to, 7,000 plus, and nobody cares. It's just what the markets can do. But if we struggle and we have some nasty corrections, then we'll deal with the volatility. But I'll end today with this. Watch that end of June level, which is only a few weeks away. But 59.05 is just a level to note, and it's just kind of it's out there like this kind of invisible, magical resistance zone that might end up getting prices fall back below it. Okay. All right, I'll let you go for today. Tomorrow I'm not going to be in the live session tomorrow, but I'll be back on Thursday, Friday, and we got some exciting stuff coming up. Nick and I'll be doing Nick and I will be doing a halfway year in review, and we'll be forecasting, kind of our favorite trades and strategies for the rest of the year. We also have a trading battle coming up with 8cap, which will be a lot of fun during FOMC next week. So a lot of good stuff ahead. All right, good stuff, everybody. Thanks, and we'll see you soon. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.